In today's world of market volatility and uncertainty, your retirement plans need to be front and center. With ever-changing tax laws, healthcare worries, and an unpredictable stock market, don't overlook the vulnerability in your retirement planning. Protecting your family and estate will be difficult with shifting policies in Washington. It's more important than ever to keep an eye on retirement.
Hi, and welcome into this holiday edition of Eye on Retirement, the weekly show that keeps you in the know, ho-ho, about all things retirement. I'm your host and financial advisor, Rick Everett, along with the full complement of panelists today, and you better watch out for some great information on this episode from our panel, including financial advisor and partner with Market Advisory Group, Matt Goolsby. Our lead CPA with Market Tax Services, Joshua Cicora. From Market Medicare Advisors, Advisor Mark Benefiel. And our lead attorney with Eidelman Law Firm, Gerald Eidelman. Welcoming everyone. Matt, you bring to the table in this episode another real-life story that unfolded around our conference tables with a woman that we'll call Kim.
I just can't get over the fact I probably pay Mark too much money if he can buy that outfit. So, it stole the show, Mark. I mean, I'm not surprised. But anyway, sorry. Yeah, back to what we were talking about this week. You know, I met with a woman last year. Her name is Kim. Let's call her Kim. She had moved her mother back here to be closer to her and be closer to the family. But kind of the tragic thing here is when she moved mom back, it wasn't long after mom had moved back here that Kim really realized mom needed more care than Kim could probably give her around the clock. And it was really disheartening for Kim because she wanted mom to come back here and wanted to have some time with mom. And it took a turn for the worse. And when I was talking with Kim, she actually watches the TV show, and that's how we met her. But when I was talking with her first, when she came in, she just didn't know where to start. And I said, well, you know, maybe it's best you don't start with me or as a financial advisor. Maybe we need to look at your mom's estate plan and see what's going on there.
Gerald Eidelman, Eidelman Law Firm. How were you able to take a look at Kim's situation and offer some guidance?
Well, in Kim's mom's situation, we were looking at what was the next step, where this would lead to. Clearly, because she needed full-time care or at least round-the-clock care, we knew that the only place to do it was to go to a nursing home. And so the question was preparing for how would Kim handle the mom's health care, how would she negotiate and deal with the nursing home, and what decisions could she make for mom as mom was getting worse because she had early dementia. And also we wanted to look at to see what assets mom had and what was going to be basically spent out, leaving her with no assets so she could qualify for Medicaid. So one of the first things we did is we were conscious of the fact that we had a clock, that we had mom losing her ability to make sound decisions. And so we needed to get her in and get her some powers of attorney to Kim so that Kim could act on mom's behalf. And mom was still lucid enough, she could talk, she could understand what was going on. So we brought her in and we signed the powers of attorney for health, powers of attorney for finance. That was gonna give Kim the ability to manage that $100,000 that mom had. It was gonna give Kim the ability to talk to the nursing staff, talk to the doctors, and be able to make decisions for mom, especially as mom began to lose her capacity further and further. And then, of course, the question was money. What do we do with this $100,000? We know that in order to qualify for Medicaid, you basically have to spend out your entire asset pool. Right now, if you're single, the most you can have in assets is $2,000. And we wanted to figure out how that money could be, some of the money could be saved by Kim doing certain things that could allow part of those monies to be used for care management and not all be spent down in the nursing home care.
Matt, such an unfortunate situation, and no one wants to find themselves there caring for an aging parent. Were there special tax considerations that came into play also?
I'm glad you brought that up because there were. I mean, most of the time people out there are probably experiencing you can't itemize, but because I'm a financial advisor and I've surrounded myself with the estate planning attorneys, the Medicare, the healthcare advisors, and the CPAs, I've experienced some times where this is maybe not the case in this situation, right?
Yeah, so when we talk to people about itemizing their deductions, people often ask about medical because that can be a big deal. And so we kind of have to break the news that, and a lot of times, even if you have those medical expenses, you can't itemize them because there's the 7.5% floor to it. You have to have more than your standard deduction. That makes it tough. One of the exceptions to that general rule of thumb is being in nursing care. Now, obviously in the situation, Kim herself wasn't in nursing care, but there is a special exception when you're providing care for somebody where that care is substantially most if not all of their income. And so that's where Kim found herself. And so she was able to pay the things that she was going to pay, you know, as that dutiful child, and be able to get a tax benefit, if you will, out of that, or at least have there be a tax help.
It's not certainly anything you want to go take care of someone to just have the tax benefit,
No.
but it's nice to know that there is a tax benefit there if you are taking care of that family member that you can benefit from to help reduce the tax burden.
Exactly. So when we talk about this, we'll say, I'll tell people, usually you don't want to be able to itemize your medical deductions because that means you're not in a good place. This isn't a great place either, but it's a better situation than for most.
And she was really glad to know that because she had no idea. I mean, she's just been thinking, oh my gosh, you know, if mom runs out of money and Medicaid hasn't kicked in, then maybe I have to pay. And you know, I'm already, you know, paying taxes on that income. Well, there's actually some benefits that she could work through there, and working as the team, we could bring that in and have that conversation.
Matt, were there any opportunities in this particular situation for the Medicare team to be able to step in and help in some form?
Well, why don't you ask Elf on the Shelf over there?
You know, I appreciate that question. You know, the first thing we thought of when we had a chance to talk to Kim about her mom my first question was mom ever part of the Elf's Union at the North Pole? Because they have a fantastic long-term care policy up there. Rider on Santa's really hooked them up. Unfortunately, back here in the lower 48, Medicare does not pay for long-term care. There is some relief under Part B, under the doctor's expenses, and Part D, the prescription policy program. But for most part, you cannot count on Medicare to pay for the actual living expenses while in the long-term care facility.
Having a whole team looking out for your retirement plan, and if you don't have a team to look out for your retirement, who's there to catch some of the details you might miss? The stress of managing all the different components of retirement could get to anyone, but you better not cry, because Market Advisory Group is right here to walk through the process together. If you'd like to set up a complimentary, no-obligation consultation with this team, ELF included, give us a call at 316-252-8707. Again, the number to call, 316-252-8707.
Your ELF experience may vary.
We'll be right back after this.
Out on the water, there is a moment. Perfect synchronization. The team working together in harmony to reach their goal. Now, imagine finding a team of financial professionals to help run your course down the river of retirement. Market Advisory Group is that team. Financial advisors, tax professionals, estate planning attorneys, and Medicare advisors. All in the same boat. If you don't have a team like this in one place, it can become a hassle to relay information between them. When you come to Market Advisory Group, we bring everyone together for you. To get you answers in real time. To help make sure you don't miss something that puts your unique plan off course. You shouldn't be the one doing all the work to keep your retirement on pace. You should have a team in the boat with you. Your voice telling them where you're at, where you'd like to end up, and how you want to get there. And at that point, everyone falls into sync, all pulling in the same direction, toward the same purpose. Your retirement's financial security. We are Market Advisory Group, proud sponsor of Shocker Rowing.
You better not pout. We're back with the next segment of Eye on Retirement. In this segment, we're talking about Doug and Jessica's situation. Matt, I'm sure this couple said, I'm telling you why we need the Market Advisory Group team. Tell us what happened.
So this is kind of, let's call it the online advisor. And this guy came, he actually, I believe, listens to the radio show. And he has been listening for past 3 or 4 years that we've been on. And he said, you know, I really wonder if I'm doing the right thing here, because I've got some questions. I've had this online advisor that's navigating some things, but they really can't help me with the tax questions, the estate planning topics. And, you know, Doug is single, and he has a pension, but he's been waiting to take his Social Security till age 70. And what the real tragedy here, I think, is, and tragedy may be too strong of a word, but where the missed opportunity is he was getting just this whole situation that had more going on in it. He was only getting a little bit of the picture, and he didn't really have the full information to make that. And, you know, probably that would be a better question for Joshua on what was going on there, because I did go down the hall and I'm like, hey, am I reading this right? Did this opportunity get missed here, or am I not seeing this correctly?
I don't know if you recall, but when he kind of laid out the whole story to us, I was struck speechless for a little bit, because it was like the whole thing was backwards from where it was. So his advisor had him pulling out of all of his Roth accounts. Now, the great thing about the Roth account, right, is that when you pull out of there, it comes back to you free of income tax. However, he was depleting this account at the expense of letting his Social Security roll up and his other tax-deferred IRAs continue to sit there. And it was a little bit like candy to him, right? He was getting this great tax return right now. He didn't really have to pay any kind of income taxes, but it was the tummy ache, if you will, was going to come here in a little bit when he hit 70, turned on his Social Security, and then he hit 73, and he was going to be forced to start taking out distributions from his IRAs, all of which was going to be taxable, all of which was going to fall after the tax reforms expire here. So that means, yeah, he was getting this great situation now, but there was going to be a cost to pay.
So what was so glaring to me was that, wait a minute, your online advisor has been having you spend the tax-free portion while taxes are lower now, but they're waiting for you to spend your IRA portion, the taxable portion, until when you've spent all your Roth and now you're starting your Social Security, and that'll even impact and cost your Social Security to be taxed more. It just, none of it made sense.
No, it didn't, and just the wrongness of that advice threw me for a loop a little bit. And so we talked about how this probably should work. Use the IRAs now while the taxes are lower. Turn on that Social Security to keep your nest egg from being depleted. I'm assuming the financial advisor had the best of intentions in mind, but it's just this whole idea of going off with incomplete advice.
And I suppose there's no use crying over spilt cookies and milk. Okay, did you get the? Okay, good. But that's right. So going forward, though, he wanted to know, okay, was there anything strategy-wise? And we took a look at, well, maybe you don't wait till 70 to take your Social Security, and we took a look at tax planning with that, and now he was getting the whole picture as far as the tax advice with the investment advice and the income advice all together now, and it was doing better there. But there's more to the story.
Online advice. So it was A, incomplete, B, inaccurate, C, what did the Medicare ELF team do?
Well, unfortunately, doesn't matter if you're naughty or nice. The Medicare is very, very specific on the ability for you to take part of discount programs. People are trying to find a way to save money. We have to answer this question a lot because there's a lot of misinformation out there. The reality is, if you're on Medicare, you are not allowed, because of anti-kickback legislation, to utilize manufacturers' rebate coupons or rebate programs or anything like that. It just is not something you can do. There is some special rules specifically around coverage gaps when people between their initial coverage gap and their catastrophic gap. Sometimes that's known as the donut hole. There is some manufacturers that are signed up with the government to be able to add some value there. A lot of times we have to work with our clients to help them find the medications that they're looking for. And unfortunately, you're talking about online advisors, get the information that people get. It's all over the place, and most of it's not correct. There are some discount programs that are available, like GoodRx or Single Care, that people can utilize regardless of their situation, which falls outside of the manufacturer's piece of that. But we really work hard to get people to come in and get the right information, because as we get into that online situation where a lot of people go to in Medicare, the reality is that a lot of information is incorrect, and a lot of it is put out there by captive agents that are specifically trying to squeeze somebody into a plan. And we really try to work really, really hard with folks to make sure they get the right information.
So you touched on naughty and nice, Gerald, when it comes to transferring assets to the next generation, making that determination who's naughty and nice. How did this individual proceed as far as setting up things so that they wouldn't be involved in probate?
Well, first of all, he came to us with a will that he had made several years ago. And part of what we had to do was to explain to him that if he had a will, he was going to go through probate, or actually his children would have to take his estate through probate. And we explained the fact that probate is a time-consuming process. Usually takes 6 months to a year before any of the money begins to go out. There's also the fact that it's a public process, so everybody gets to know your business and your children's business. And worst of all, the cost involved in processing a probate estate can be significantly expensive, because you normally wind up going through an attorney. So one of the things we had to figure out is, okay, do you want to be in that situation? If you don't, then we need to talk about what else to do for you. And then, of course, he had no powers of attorney. He had no power of attorney for finances, no power of attorney for health. And if something were to happen to him as a single person, his children would have a really hard time intervening on his behalf, because they didn't have a power of attorney. They would have had to go to court and get a guardianship or conservatorship over them. So we didn't try. We actually worked on those documents and created a estate plan that met Doug's needs and also gave the kids, the heirs, what he wanted to pass on to them.
The real question I have, though, is did he do it wearing that hat?
So, you made an excellent point, Gerald. And often when Gerald's in the conference room, I see him making a list of the potential estate concerns for those we meet with and checking it twice for anything that we can help with. If you're one of the folks setting up a Christmas tree this time of year, it doesn't take long to figure out if the base with the legs that support it aren't in the proper alignment, the whole plan is off, much like retirement planning. If any of your 4 legs of retirement planning, financial, taxes, estate, or Medicare planning are not properly aligned, your whole plan could be off too. If you'd like to give us a call to help you set it straight, we'll be glad to help. The number to call, 316-252-8707. And we'll be back with the final segment of Eye on Retirement, and you're going to find out what's next right after this.
How confident are you in your current financial plan? Do you know with certainty how the recent market volatility will affect your future hopes and dreams? How much are you paying in taxes? And how much are you losing to unnecessary high fees? You didn't work to save this money so that you could spend your time worried in retirement. Now is the time to take charge of your finances so you can feel confident about your future. Call in during the next 30 minutes of today's show only to set up an absolutely complimentary, no obligation, full-blown financial review that will result in your own customized written plan. We'll start with a full-blown analysis of what you already have. By running a report to untangle how much you are currently paying in fees, how you're allocated for risk, and what it's costing to work with your current advisor. Next, we'll identify your goals. Where do you see yourself in the next 5 years? Where do you want to go, and who do you hope to go there with? Is your current financial plan set up to get you there without mishap? Let's design a roadmap to create a financial plan you can follow with confidence. Get the piece that so many people are missing from their retirement. Find out how having a written plan can make a difference to your retirement dreams. Call now to schedule your complimentary, no obligation, full-blown financial review today.
Hi, and welcome back into the final segment of Eye on Retirement. So as we finish up this episode, the question that comes up when reviewing retirement plans is, who's naughty and nice when it comes to the gaps other advisors leave in retirement plans presented to us by potential clients at Market Advisory Group? You mentioned the online advisors, but we see plans come to us all the time that have gaps in them, Matt.
And that's not uncommon because saving for retirement is entirely different than the distribution phase in retirement. You save for retirement, normally there's only tax benefits, right? I mean, you put money into your IRA or 401k and you get a tax deduction.
That's right. It works out, very nicely for people. It's easy to do, payroll contributions, things like that. It really just kind of flows. You got HR people there to help you through it. But
Runs in the background on autopilot.
Autopilot.
But then when you go to take money out of those accounts or start Social Security or have to take the RMD at a certain age or lose a spouse, all those things have tax consequences to them, and normally they're not good tax consequences.
Usually they're not, and usually there's different people involved at every different place, whether it's Social Security, whether it's the benefits people on a pension plan, whether it's whoever's holding your IRA, your 401k, what have you. All these different people are involved. Nobody's looking at the whole picture.
And so it's not uncommon, back to what you were saying, Rick, it's not uncommon for people to be working with that same advisor that helped them save for retirement and not realize they need an entirely different system set up to help them navigate all this crap, because not only do you get all this stuff set, what I use around, am I on the naughty list now? Oh man.
Oh, what do you mean?
And I got so close. It was just like, what, it's just in like 2 days, and now I'm, oh man, I'm gonna need a lump of coal. And they got Buddy the Elf over there, there's one handful. Anyways, you got all this stuff going on, and it's hard because what we'll find is maybe someone has the financial advisor, and maybe they have someone helping them with the taxes. Maybe they had someone help them with their healthcare decisions, and maybe they do have an estate plan, but I would challenge them with this. Are they all meeting with each other and you around the same table at the same time in the same room? Probably not. And you got to ask yourself, who's really working for who? If you're paying all those different people, or in some way you're compensating all those different professionals, you're probably overpaying, right? I mean, and then not to mention not being very efficient with your time.
Mark Benefiel, Market Medicare Advisors, perhaps not gaps in Medicare plans, but the improper plan at a more expensive cost?
All the time. I mean, we just finished up our annual enrollment period, and I haven't told up all the numbers, but there's folks that we literally saved thousands and thousands of dollars every year because they were in an inappropriate plan for them. Some it was because a past advisor didn't have the right plan. Sometimes their plan changed a couple years ago and they never bothered to check in to see if there are any cost savings. I know one particular person, we were able to save them over $17,000 just on their medications. So it's got to be in the right plan.
Indeed. Gerald Eidelman, Eidelman Law Firm. You make the list, you check it twice, and you also find continuously ways of improving existing state plans.
Absolutely. People sometimes have a plan that they set up years ago and they set it and forget it. and they come to me, and I, will go over their plans and determine whether there needs to be changes. And what I find a lot of times, I have a couple right now that had plans that they set in 1999.
Oh, wow.
And they never changed anything. Well, in 1999, their kids were young. They couldn't, carry on the roles like powers of attorney or executor or trustee of the trust. And so the people that they had assigned at the time, some of them were no longer with us. And so part of my job is to be able to update those documents, make sure that the intent of the client is being carried out in the documents that we do have.
Very good. And it takes a team to have the entire plan covered.
Takes a team to drive the sleigh.
There you go. There you go. Well, folks, that's all the time we have for today. Give us a call at 316-252-8707 and let us look over your plan or help create the best plan for you. Thanks for watching our show, and especially just as Santa Claus is coming to town. From all of us at Market Advisory Group, we hope that you have a wonderful holiday season, and please know and rest assured, with dreams of sugar plums dancing in your head, that we're here to keep an eye on retirement.
Unless otherwise indicated, all client and prospect names mentioned on this show have been changed to protect the identities of the individuals discussed. Investment advisory services are offered through Foundations Investment Advisors LLC, an SEC-registered investment advisor. The content provided is intended for informational and educational purposes only. The views, statements, and opinions expressed herein are those of the individual speakers and not necessarily those of Foundations and its affiliates. The information contained herein does not constitute an offer to sell any securities or represent an express or implied opinion or endorsement of any specific investment opportunity, offering, or issuer. Any discussion of performance or returns are not indicative of future results. Each individual investor situation is different, and any ideas provided may not be appropriate for your particular circumstances. Foundations only transacts business in the states where it is registered or excluded or exempt from registration requirements. Registration as an investment advisor is not an endorsement of the firm by security regulators and does not mean the advisor has achieved a specific level of skill or ability. No legal or tax advice is provided. Always consult with a tax professional. Legal services are offered by Eidelman Law Firm. Tax services offered by Market Tax Services. Market Advisory Group does not provide legal or tax advice. Any comments regarding safe and secure investments and guaranteed income streams refer only to fixed insurance products. They do not in any way refer to investment advisory products. Rates and guarantees provided by insurance products and annuities are subject to the financial strength of the issuing insurance company, not guaranteed by any bank or the FDIC. The guest commentators featured in this show are not investment advisor representatives of Foundations and do not provide advisory services. Market Advisory Group does have several investment advisor representatives that can provide such services. This is not endorsed or affiliated with any U.S. government agency, the Social Security Administration, or associated with any federal Medicare program. We do not offer every plan available in your area. Any information we provide is limited to those plans we do offer in your area. Please contact Medicare.gov or 1-800-MEDICARE to get information on all of your options. A Roth conversion may not be suitable for your situation. The primary goal in converting retirement assets into a Roth IRA is to reduce the future tax liability on the distributions you take in retirement or on the distributions of your beneficiaries. The information provided is to help you determine whether or not a Roth IRA conversion may be appropriate for your particular circumstances. Please review your retirement savings, tax, and legacy planning strategies with your legal/tax advisor to be sure a Roth IRA conversion fits into your planning strategies. All rights reserved.